Nestle, the M&A leader, even acquired Starbucks. Well, sort of. Welcome to this Valuation Masterclass case study. My name is Andrew Stotz, and let's get into it. First, let's understand the company's background. Nestle is a Swiss-based company that owns more than 2,000 brands. Some major brands that you would know: Kit Kat, Nespresso, and Maggi. They sell products across 188 countries worldwide. Incredible. In fact, it truly is a worldwide company with about nearly 100 million Swiss francs in revenue in 2023 that is spread nearly equally across regions, about 35% in the North America, 24% in Europe, and about 27% in Asia. And then there's another 14% in Latin America. Nearly 60% of 2023 revenue comes from the top three product categories: powdered and liquid beverages, so that's Nescafe, Nespresso, Starbucks, and the Milo brand. And then we have pet care. Some people don't even realize how strong Nestle is in pet care, but the Purina brand is a massive leader. And then there's nutrition and health science, which is focused on healthy drinks and food. Now, there's four other categories that are filled with brands that we also know. 13% comes from prepared dishes, cooking aids, milk products and ice cream, confectionery, and even water. So Nestle ranked as the world's most valuable food brand in 2023, according to Brand Finance. Here we can see number one, and it shows the next biggest brand out of China is Yili, which is number two. And then what most Westerners would understand is the Lay's brand, which is still, half the size of Nestle. So what about its competitive advantage? Well, the company was founded in 1905 and has about 270,000 employees. Its main segments that we mainly know is Nescafe and also Kit Kat as another example. So its competitive advantage came through a diverse brand portfolio, global reach, and acquisitions. We're going to talk about those acquisitions in just a second. So by building a diverse brand portfolio and expanding globally, it's solidified its position in the consumer goods market. So let's understand a little bit about this company's M&A activity. Key M&A milestones from 1929 to 1988. Chocolate company in 1929, Maggi, which they bought in 1947, and that's a leading brand. And then we can see in 1988, they bought the confectionery company that had Kit Kat and Smarties and the like. And of course, the Kit Kat acquisition was massive. But here's where it gets interesting. Remember, their second largest product area is pet food, and they bought Purina, or Ralston Purina, which was a leading pet care company in 2001. They also bought Häagen-Dazs and Pfizer Nutrition, and then some other products over the years. But I want to talk about Nestle's deal of a lifetime. That's what I call it. In mid-2018, Nestle gained perpetual global rights to sell Starbucks consumer and food service products. And they added ready-to-drink in 2021 with some additional money that Nestle paid Starbucks. In fact, for the original deal in 2018, Nestle paid Starbucks about $7 billion of upfront cash, as well as more later. And that cash, of course, came in really handy when COVID hit in 2020. Starbucks had a lot of cash and could handle the downturn. Nespresso and Dolce Gusto can sell now Starbucks through their machines. And Nestle also acquired rights for Starbucks teas. And all in all, this boosted Nestle's premium coffee profile. Now, it's a deal of a lifetime because it turned out to be really a great deal for both parties. But let's just try to understand valuation, since this is a valuation masterclass case study. There's a company called JAB Holdings, which paid 3.1 times price to sales for Keurig Green Mountain. And they also paid 2.5 times price to sales for Peet's Coffee and Tea. And they paid 2.8 times price to sales for DE Master blenders. So what did Nestle pay for Starbucks? Would you consider Starbucks to be a more premium or less premium brand than these companies? I would say much more premium. And so what did Nestle pay? They paid 3.6 times price to sales for limited but perpetual rights to Starbucks. What's also interesting is that they didn't buy any physical assets from let's say, there was no transfer of physical assets. It was really the rights. I think it was an amazing deal, and we can see the performance of Nestle afterwards. Nestle is also all about innovating, and in 2017, they had launched 1,000 new products, of course, their owns and iterations of their owns, plus others that they acquired. So the question is, does this strategy lead to a competitive advantage? I don't care what your strategy is. If it doesn't lead to a competitive advantage, then you've got to question it. So is the company financially world-class? That's my question. I use my world-class benchmarking scorecard to measure if a company has a competitive advantage. And I developed this scorecard 10 years ago, and here's how we construct it. We gather the yearly and quarterly financial data of 26,000 companies worldwide, and then we calculate each company's profitable growth score, which is a composite measure of both profitability and growth. So is the company financially world-class? That's the question. Well, how do we figure that out? After that, we rank the company relative to sector peers of a similar size. A decile ranking of 1 or 2 is financially world-class, while 10 is the worst. And we assess the company's performance over the prior 4 years and the past 12 months. So here we can see the world-class benchmarking triangle or scorecard for Nestle. I've hidden a portion of it just because that's more detail down below. But what we can see is that, gosh, Nestle is so close to being financially world-class when compared against 540 large consumer staples companies worldwide. But we can say that only in 2021 was Nestle considered financially world-class. It could be argued that maybe the competitors fell out during that period. But if Nestle can just get its profitability up and rank itself as a number 2 out of 10, in other words, they move up so that they get into about the second decile, they would be financially world-class. So what does the valuation look like? Well, I'm going to keep it simple and use my FVMR methodology to determine the attractiveness of the company and to see if I want to look more deeply into the valuation. FVMR stands for fundamentals, valuation, momentum, and risk. Let's look at my abbreviated FVMR scorecard. Here you can see the F is ROA, the V is PE ratio, momentum is earnings momentum, and 6-month price change, and the times interest earned and the beta are the risk factors. And I look at a ranking of 65 companies in my data set here, and we can see that Nestle is ranked a number 58. Why is that? Well, ROA is relatively low, PE is somewhat high, very little growth in the EPS right now, and price change is momentum is negative. Times interest earned is not bad. The risk there on the balance sheet is not bad. And the beta is a very low risk beta. So would I say that this is an attractive company or not? I would say it's not that attractive from a valuation perspective, but if profitability started to rise and if the share price started to fall, I would say it would be interesting to dig deeper. What do you think about Nestle, the M&A leader that even acquired Starbucks? Well, sort of. Don't forget, you can go to the link in the description and you can download this PDF that I'm presenting as well as the abbreviated FVMR scorecard for the world's top 100 companies. I'll see you there.